President Donald Trump's imposition of tariffs in Mexico, Canada, and China threatens to disrupt the global trading system. Trump, as projected by his political and economic stance, is set to prioritize exports, disincentive imports, regulate capital movements, and centralize currency decisions, all in the pursuit of strengthening the U.S. domestic economy and prioritizing American interests. The administration's 10% tariffs on all Chinese goods have already begun, while the 25% on all goods from Canada and Mexico have been postponed for a month. These measures have triggered retaliatory actions which has affected from the affected countries, while the immediate effect of the move will be felt in the U.S., Canada, China, and Mexico. African economies, particularly Nigeria, could take a hit as the move is expected to fuel global inflation and disrupt supply chain. Well, let's talk to Dr. Andrew Nevin. He's an economist, research professor. He joins me live from Texas, the United States of America. Dr. Nevin, good afternoon. Thank you for being on the program.
Toto, it's always a great pleasure to be with you, brother.
Thank you so much. I'm sure you see what is playing out. A lot of tariff increases here and there. And today we even have a new one on steel and aluminum, renewed one. What impact or what do you think this means for the entire global economy, considering what's been on ground before now, trade disruptions and all of that?
Well, as you said, I mean, there's trade disruptions, but I think what's going on, particularly in Canada, for example, and I'm Canadian, as people know, is that people are really coming to realize the U.S. is not a very reliable partner. So, I mean, you take these actions for domestic or the reasons that we all understand President Trump is taking.
And take advantage of this opportunity to also build capacity across the board.
Well, I think certainly in the African context, I mean, I've talked about AFCFTA for many, many years, and I've always said it's a slow process. It's part of the 50-year plan for the African Union. But I mean, this should be a wake-up call to Africa that their future relies on Africans trading with Africans. In the context of Canada, for example, we have lots of intra-provincial trading barriers, so barriers between provinces. Now we're talking as a country to remove it, but also improve we really laid down a bet over the last few decades as Canadians to trade with the United States. And now that, as I said, is something that's kind of less stable and becoming very unstable. So now we're looking at India, we're looking at China, we're looking at Africa as well. And Africa needs to take the same strategy. I mean, they should be trading with Africa. And there's not a unipolar world here. Africa can't rely on the United States as its trading partner. It needs to trade with Europe, with India, with China, with Asia in general on that. And I think that ultimately this strategy of the United States is going to backfire because it can't control the whole world economy. And it's lost so much of its soft power through its actions over the last few weeks.
But Dr. Nevin, you agree with me that the greenback has so much strength that, many countries would, rely on it. Loans are denominated in dollars. Even GDP is calculated in dollars. So how do you see this currency issue also impacting all of this war back and forth?
Well, I mean, it's a very interesting question. I mean, for several decades, I've been watching this, and you slowly have seen the United States share of trade in U.S. dollars, for example, decline, but it's very slow. And I think the reserves, central bank reserves, are still about 2/3 in U.S. dollars, whereas they were about 75 or 80% kind of 10 or 15 years ago. So there's been a slow decline, but there hasn't been this move to leave the U.S. dollar. I mean, it is difficult to leave, in fact, the U.S. dollar system. And of course, the U.S. has this ultimate weapon. Well, people use the U.S. dollar, they can sanction people, and I think we'll see more and more of that and create pressure to conform to U.S. policies on that. But inevitably, the U.S. will become less and less of the global economy. And the other factor that's very important in all of this is demographics. So you can take these actions, but we're seeing major changes in demographics. We're going to see shortages of young people in every country in the world, effectively outside of Africa. So as that plays out, in fact, Africa is going to become more and more important to the global situation. But this idea of kind of having a multi-currency global trading system has not come to pass yet, as you say. So the U.S. still has quite a bit of leverage in the economic system.
But now that also, let's look at it from this angle of crude oil prices. Many expect that something would happen with regards to the price of crude. And Trump is saying, yes, pump more. He wants them to pump more crude. And many say if the market gets saturated with products, we might see a drop in price of crude oil. And if that happens, definitely it's going to affect projections for budgeting and all of that. So what's your take also with the impact of this, or the expected impact of this, on the price of crude moving forward in 2025?
Well, I think the U.S. policy is very clear. They're going to pump as much as they can. I mean, oil is going to come to an end, as my friend Taiwo says. The Stone Age did not end because we ran out of stone. The Stone Age ended because we moved on to other technologies here, and we are moving other technologies. I mean, it's interesting sitting in Texas. I'm sure the listeners think of Texas as an oil and gas country, and it is, but it's actually the largest wind producer of energy in the United States. It produces more than 3 times.
Think anything could come out of that?
Well, it was President Trump so we had the North American Free Trade Agreement. So if we go back a little bit in history, Canada and the United States have had very close economic integration for a long time. We had the Auto Pact in 1965, and that became the North American Free Trade Agreement later in the early 90s, late 80s, early 90s. And we have $3 billion a day of trade between Canada and the United States on that. So enormously close integrated industry, particularly in the automobiles sector on that. And what happened was in the first term for President Trump, he renegotiated the Canada, Mexico, United States Free Trade Agreement, and he said it was a wonderful deal. So now he's coming to the second time as president, and he said he's essentially ripped the deal up. So that goes back to the point I was making a bit earlier in the show, is now become an unreliable trading partner. And the sentiment shift in Canada has been enormous. Just in a few weeks, we've gone from being the closest economic and security allies in the world, with the longest undefended free border in the world, incredibly peaceful cooperation and coexistence for many, many decades, friends and neighbors. I mean, the United States is obviously a big brother to little brother Canada, and all of that goodwill has evaporated in a very short period of time. And so this is a trade deal that was his trade deal that he had, that he essentially said he's not going to honor, which is, to us as Canadians and Mexicans, extraordinary.
Now that we start to see some retaliations, we start to see some countries coming back also for the United States, even some still saying that they're going to file a suit with the WTO and all of that. Do you see renegotiations coming on moving forward?
Well, I think you continuously see negotiations, but I think people are going to go into these discussions recognizing that no deal is necessarily going to be honored. I mean, the Trump administration has shown, not just this time around in the second administration, but also in the first administration, that they're prepared to just change their mind on anything. As I said, we have this signed agreement. It was negotiated by the first Trump administration, and it's being changed effectively, weekly, daily, in a sense. So that's a wake-up call for us, as I said, to say, how do we protect our economic and social interests in Canada, recognizing that we now have an unstable partner. So I used to say, if you go back a year ago, I used to say we were very lucky as Canadians that we had the United States as our neighbor, because if you think of an analogy here, you've got Russia and Ukraine, and for the Ukraine, Russia is just a terrible neighbor, and we all understand why. And we always thought we were blessed in Canada in having such a great, stable, strong neighbor with a strong economy and the kind of economic relationship that we had up until about 3 weeks ago. And now we recognize we're, in a sense, like everyone else, we're on our own. And so we need to protect our own economic interests in the best way possible. And of course, this is all against a background of the newly expansionist U.S. policy. So you have the discussion about Kenya, and they are able to do that effectively. One of the reasons is because they have a common language. I think we really suffer in West Africa from having it split up between English and French. So, I mean, Cote d'Ivoire is a very large country, but the number of Nigerians that speak French to be able to take advantage of the opportunities there is very small. So we're building the Abidjan to Lagos, or Lagos to Abidjan highway, which is an incredibly important step. As that gets completed, it should open up trade opportunities. But this language barrier is real. And I think one strategy that would really help Nigeria is have made a commitment to train 10,000 or 20,000 young people a year who could actually speak fluent French and could help in this economic integration across West Africa. Because, of course, AFCFTA doesn't mean anything necessarily at an African level unless we can start out by having this regional economic integration.
Dr. Nevin, let's wrap up with the outlook, particularly for the entire continent, because this is actually impacting everywhere. We know that the Russian-Ukraine war is still on one side, where we still have that challenge. And all of these challenges put together with what is happening in the United States would fuel inflation. Interest rates might also get high. Borrowing from international communities might also become an issue. So what's your outlook, considering projections we already have for the year 2025?
No, I think you're exactly right. I think we're going to see more inflation. I think we're going to see subdued growth. I think we're going to see a U.S. economy that is not doing what President Trump asked. So it's going to put pressure on Africa in the short term. In the medium term, go back to the fundamentals here. I mean, the world needs young people to function in many, many different sectors, and the only continent that has young people is Africa. So to the extent we invest in our young people in Africa, Africa is going to be successful. And of course, I've been the major advocate for Nigeria to export high value added services rather than necessarily manufacture products. The Vice President, His Excellency, is executing that strategy, and I still think that whether the young Nigerians stay in or Africans stay in Africa or Nigeria to deliver the services, or whether they go abroad and deliver services in country, both of those strategies are effective. And the world needs African young people. It cannot function without them when you look at the demographics. So I think the short-term outlook is challenging, but I think the medium-term outlook for Africa, if Africa does the right thing with investing in human capital, is bright.
Economist Research Professor Dr. Andrew Nevin, thank you so much for always being there, and it's good to see you. Hope you're having a good time over there, despite the tariff issues.
We're trying. Thank you. Thank you, Tolo. It's always wonderful to see you, brother.
Thank you. Enjoy the rest of your day.